Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Today guys we again will take a look at the Japanese yen, because the analysis that we have prepared on the 3rd of February demands some update, although in general it's still valid, but there are some new issues have appeared, especially on the higher time frame charts, on the monthly time frame chart, that gives us more information and we need to adjust a bit our plan. Speaking about the euro currency, well guys, in general I have decided to speak about Japanese yen today because our medium-term analysis on the euro currency is still valid, and by recent action to the upside that we have seen on Friday, market in fact has confirmed that the price action that that euro currency has shown on the higher time frame charts, on the weekly time frame chart, is not quite logical for the normal bearish development. That the moments that we have discussed in our previous weekly research, we said if this is really the reversal in the euro currency, market should not behave as it does right now, and that tells us that probably something is wrong with this bearish reversal, and if something is wrong with the bearish, then it's probably market will turn to the bullish action, and that was our major idea. That's why I think that on the euro currency, market really could continue move higher and even starts to action right to the yearly period resistance one. But we will probably not once or not even twice will take a look at the euro currency on the coming week. But right now let's speak about the Japanese yen. So market has formed the bullish pattern on the Japanese yen that suggests probable action to the 106 area, 106, 106.30. If you are really interested what this pattern is, you could read our weekly analysis of the higher time frame charts on the monthly and weekly time frame chart. But here on the daily time frame chart we will discuss only the short-term perspective. So our long-term context on the Japanese yen is bullish. Also guys, take a look that market has hit our bread and butter trade, weekly bread and butter pattern. That was the minor target of this bread and butter, is the 618 resistance of the whole move down on the weekly time frame charts, 103.65. We have discussed this on the previous month, almost a month ago. And some people asked on forum that, well, probably market has hit the target, but it was too extended period. It has needed to wait too long for hitting the target. But guys, I did not see any problems with this, because that was the weekly pattern. And on the weekly time frame chart, market has hit the target during the 5 candles, 5 periods. So imagine that this is the hourly time frame chart. Is it really a long period, the 5 hours that market has hit the target? I guess not. So if you think that it was really too extended time and you feel some uncomfortable, some worrying, some frustrating about this moment, it means that you have chosen not quite correct period for trading, either by the personal reasons, so that is not suitable for your personality to trade on the weekly time frame chart, or by your money management, so you can't place the stop that will be matched, that will be correct, particularly for this trade. Yes, I agree that probably this action to the upside was a bit dramatic, since we have expected to get something A, B, C, D pattern right here, but instead of that, market has formed this some kind of the wave, another attempt to move down, and only after that has turned to the upside. But with this move to the downside, market hasn't reached the invalidation point of the bread and butter trade. That's why I can't say that this was really bad trade, and for me it's on the weekly time frame chart this trade has worked really perfect. Well, since we're expecting the more upward action in the long-term period, hence, as I said, our context still bullish. But right now, as you can see, market has hit the deadly combination for the short-term for bulls in the short-term perspective. That is the daily overbought, that's accompanied by the fib resistance. And Judd Napoli calls this as the stretch pattern. That is the bearish stretch pattern. This is directional pattern, and by Judd Napoli framework, direction overrules trend. So it means if you have the bullish trend on the chart, and if you draw the MACD predictor, MACD indicator here, you'll see that trend by MACD stands bullish. But you have the bearish directional patterns. Then you should follow the directional, because the directional, as I said, overall trends. That's why in the short-term perspective, we need to wait the retracement right back down, mostly due to this not very pleasant combination for the bulls. That's overbought, but accompanied by the fib resistance. Also, guys, take a look at this ABCD pattern. Market has hit the 100% extension, so some retracement will be reasonable. So if you trade on the daily time frame chart, you should do nothing but just wait when the market will show this retracement, and then we try to use this retracement for taking the long position, because the next target stands right here. It's 1618 extension of this ABCD pattern. It's 104.50 area approximately. But currently, as you can see, this target stands beyond the overbought. That's why it's not very interesting right now for us. That's what about the retracement. The second moment here is very important, is that take a look at this ABCD pattern by itself. What we see? CD leg is much steeper and faster than AB. By the CD leg, market has accelerated right to the 100% extension. That tells us that market probably will show the continuation to the next target after retracement. That happens in the most cases. When the market significantly accelerates on the CD leg, this tells us that some continuation should follow. And finally, the third moment here is take a look at the monthly pivot points. Market has moved and closed above the monthly pivot resistance one. And this suggests that this action to the upside is not just a retracement, because usually monthly pivot resistance one holds the retracements. On the lower time frame charts, if this is just a retracement, the market stands in the bear trend. But moving above the monthly pivot resistance one suggests that this is not just a retracement, and that market really could follow to the upside. So that's our trading plan. The first stage is to wait when the market will form a retracement and reach some support level where we could take the long position. Second stage, taking the long position with the target approximately around 104.50 area. That is the short-term trading plan. On the higher time frame charts, our target is 106, 106.50. And after that, we will see what to do next. Well, speaking now about retracement. So if you take a look at the 4-hour time frame chart, we see nice thrust up. By the way, guys, the weekly pivot resistance one will stand approximately in the same area where the target of the daily ABCD stands. So it's 104.25, 104.26 approximately, while the target stands 104.50. So very close. Now we have the weekly pivot point, this thrust up. Well, guys, in general, if even market will show retracement right to the 618 support and to the weekly pivot support, that will be not a strategy. So this will be in general acceptable, but it would be perfect if market will end retracement somewhere in this area, around 102.40 area, 102.80, somewhere in this area, because that will be the weekly pivot point. That you can see this is natural support resistance line, and this is natural some consolidation, some rectangle here stands on the market coil for some period. So if market will stick inside of it, that will be much better if market compares to if market will show the deeper retracement right to the weekly pivot support one. But currently I do not see any reversal pattern yet, because market just has hit the top and just has no time to create any patterns. So what we could get here, maybe we could get just simple ABCD pattern. That's also possible. Also we could get, for instance, some Judd Napoli pattern, for example double repo, because market overbought and we expect to see some deeper retracement. If we will get the double repo pattern, double repo sell, in this case the target will be the 50% support of the whole thrust up, and that's approximately stands in the 102.40 area, so the area that we just have discussed. So we will see. If you are a scalp trader and you have the skills to trade it on the short side of the market, well, I absolutely have no objection about this. This could be done because you have the daily Jordan directional bearish pattern. So this is also the subject for the trading will be. But this is the daily report, and we mostly taken the situation from the perspective of the daily time frame chart. Well, that's in fact all that I would like to say about the Japanese yen. So guys, our medium-term target is the approximately 106, 106.50. Short-term target is 104.50. But first stage of the plan is to wait the retracement down. When we will get it, we will try to take the long position. And the second stage already will be the move to the next target on the daily time frame with the daily BCD pattern.